Hey, my name is Connor and welcome to Crypto Empire, where I show you how to dominate in the crypto markets. In today's video, we're going to be further discussing supply and demand zones. We're going to be going into further detail about how to pick the strong zones with the highest probability on the chart. So let the gains be with you. If you are new to Crypto Empire, I'm very grateful to have you here. Before we go any further, if you haven't subscribed already, please smash that subscribe button, like this video, and comment down below what you think about supply and demand trading. But this video is going to go further in detail about my previous video in regards to supply and demand trading. That one, I just wanted to cover the basics and give people who are brand new a general idea about how to look at candlestick charts so that they can start making smarter decisions while participating in price action trading. It's really important that you get the basics down first. The fundamentals are always the most important. So make sure you know what supply and demand zones are. We have 4 formations, 2 continuation patterns, 2 reversal patterns. Continuation patterns would be rally, base, rally, and drop, base, drop. And then the reversal patterns would be drop, base, rally, and then rally, base, drop. So we're gonna jump into the chart right now, so I'm not talking with my hands through the entire video, so let's go. Okay, so we're looking at a 4-hour price chart right now of the Bitcoin US dollar perpetual futures contract on the Bybit exchange. So little word of wisdom, always do your charting on the exchange that you trade on, because every exchange will have a different looking price chart, because obviously the buy orders and the sell orders are different for every exchange. So make sure you use the correct price chart when you're on TradingView, and use TradingView as well. Do your charting on TradingView. It all saves there for you. It's very easy to use. I have a link down in the description below to sign up to TradingView. It's free. Start off with their free account. As you start making money trading, well then, spend $15 a month and get their premium account where you get more indicators and stuff. I highly recommend it. It is an amazing tool, and most profitable traders are doing their charting on TradingView. So it's really important to always pick strong supply and demand zones. How do you know which zones are the strong ones? Well, generally speaking, not always, but generally speaking, the reversal zones are the stronger zones. What I mean by that is the rally, base, drop, and then this would form a supply zone, and then the drop, base, rally zones where it forms a demand zone. These are generally speaking the higher probability zones. So we're going to start off by focusing on points on the chart where price reversed, because those are great indicators. When we see a reversal in price, it's a great indicator that either a supply or demand zone formed. So as we can see here at the all-time high of Bitcoin, up at 62,000, price came up, made a higher high, consolidated for a bit, and then had a strong move down. Now, if you watched my previous video on supply and demand trading, you know that a strong move away from an area is a great indicator that that is a strong supply and demand zone. It's a higher probability zone. So as you can see with this one example, price left the zone and then it based down here. It formed a drop, base, rally, had a strong move out of this zone, and then it came and touched this supply zone up here. I'll mark this for you guys. It came and touched the supply zone, and then price respected it and had a move down. So what we're looking at here, it's called a fractal. And now fractals appear on every single time frame. It doesn't matter if you're looking on a weekly, a daily, or a 5-minute chart. Fractals are there, and it's the same pattern playing out over and over and over again. So now, generally speaking, how fractals work is after we have a large rally, price will create one swing high here, and then price will create a low. And then price will generally create 1 to 2 more swing highs before picking its direction for the next breakout. So as we can see here, price came and created this swing low, it created another swing high, and then a higher low, and then it created this next swing low, and then it finally picked its direction and had that move down. So that's called a fractal. We can see it on the reverse. Let's go right here to this area on the chart. So price had a strong drop down, creating a low, and then it created a swing high for the range, created another low, small swing high, and then another low, right? And then it rallied back into a level of supply over here, came and touched the zone again and moved away. So what I want you to pick up from this is that after every strong rally or strong drop in price, price likes to create 2 to 3 swing highs or swing lows before it picks its direction for the next breakout. And now what we want to do as supply and demand traders is we want to catch the move when it creates that second or third swing high or swing low. Let me explain what I mean by that right now. So I went ahead and marked all the supply and demand zones that I could see on the chart from a distance. That's what you're seeing with all the boxes. But let's use this recent price action as our example. So price had this strong move down, created this one swing low. Then it rallied up and it based for a bit. It consolidated. This would be a supply zone. And then price had to move away from that level of supply. It created two lower lows. And then from here, it rallied back up in price. And where did it go, by the way? If we could always draw lines, a little quick tip, always draw a line to the lows and the highs of the zone. So as we can see here, price created this lower low, and it dropped right into a rally-based rally zone. So if we draw that on the chart, it would look like this. And yeah, so price came and tested the zone once already, and then it came back down and tested the zone again. And when it did so, it created another demand zone. And then price rallied out of the demand zone. It created a rally. See this doji basing candle, and then another strong bullish engulfing candle out. We would take the top of this candle body to the lowest wick, and we can see that price came exactly into the demand zone, and then it picked its direction. And so fractals, they're on all time frames, and if you zoom in, you see them even more. So it came and dropped into this demand zone. It rallied out of the zone, and then it came and it retested the newer form demand zone. See this bullish engulfing candle, strong move away. This is a drop-based rally, and then it came and tested the demand zone again. You see this play out over and over and over again in the market. So once you start to pick up on how it works, this is all pattern recognition, guys. Price action, trading, is driven by fear and greed. And we can pick up on that by seeing the patterns and how they play out in the candlestick charts. So it's really important if you're new to supply and demand trading, that you get this formation literally ingrained in your brain. This needs to become second nature to you. Like I said in my previous video, chart it out, do your homework, take screenshots, and seriously study this. Because once you realize how simple it truly is, then your trading will really get to that next level. And like I also said in that previous video, technical analysis is just one part of trading. You also have your risk management, which is the most important part of trading, and you have, of course, managing your emotions as a person. Because if you can't manage your emotions, you take on too much risk, you're not going to become a profitable trader. So super, super, super important that you get this down. And I will also mention that I always combine my fractals by using the Fibonacci retracement tool. So we'll use this same example of this rally-based rally zone. If we take our Fib extension, to use the Fib, I'm going to be making a full video about using the Fib, but just briefly, if you want to learn how to use the Fib, you take this swing high to the swing low of a move. So I'm going to be measuring this move here, from this low to this high. So I grab the high here, and I bring it down to this low. And as you can see, after price rallied and created this high, it created another low. And where did it come down to? It came down right into the golden pocket, the 0.618, 0.65 golden ratio level. You will see time and time and time again, once you learn how to trade the Fib and you get good at picking up supply and demand zones, the 0.618 extension, the 0.786, and personally my favorite for fractals is the 0.886. Just briefly, I'm going to explain why I love the 88.6 retracement. So the 88.6 is the strongest reversal signal there is, in my opinion. So it's always going to come after a strong rally in price or a strong drop in price. Now this is the W chart pattern. This is why I love it. So after we see a huge move down in price, it will always retrace a bit. And then it usually likes to test the 88.6, which also creates a higher low before really picking its direction for the reversal. And as you can see, it is a nice W pattern. Now, for a supply zone, if price has a strong rally up, it would always retrace a bit, and then it will always rally again, usually to a level of supply over here, create a lower high before picking its direction. So these are your W patterns and your M patterns. They are super powerful. Now I'm going to give you more examples right here in the chart so that you can get a better understanding about this and really learn how to trade it on your own. So let's look right here on the chart. And this is a great example because we can see that price rallied up, created a level of supply, created one swing high, then it came down, and then it created a swing low. And then it came up and created another swing high a bit lower, came right into a level of supply, and it dropped out, and then it created another low of the range, testing this previous demand zone that got tested here, created a swing high. This is another fractal. This is a fractal of a fractal right here. Came back down into the demand zone, exploded out. So you always want to be looking at the highs and the lows on the chart. Here you have one low of the range, then here you have another low, and then here you have two more lows. So usually we see 2 to 3 swing lows or swing highs in the range in the fractal before we see its next move, but this example has 4. The picture is going to be different on every single chart with every new pattern that forms. It's not always going to be picture perfect, but when it is picture perfect, that is the opportunity to take your winning trade. So here we can see we had a drop base, strong, explosive rally. Price formed this demand zone down here, then it formed the supply zone down here. Price had a strong move down right into this level of demand, and then it rallied back up right into this level of supply. It was playing ping pong between supply and demand, which price absolutely loves to do. And why this actually happens is there is a huge number of sell orders up here in this zone. Not everybody's short got filled. And then when price starts to rally back up, a bunch of traders, they get emotional, they get FOMO, they're like, wow, I'm missing the rally right now. So they all go long right into the supply zone. Little do they know that the market makers, the institutions, the exchanges knew this was going to happen, and they had their large sell orders placed. So all the retail investors buy straight into the supply zone, and then the market makers and the institutions, they sell it, and as we can see, price reacts by dropping in price, in value. So this is how the market works. It doesn't always respect supply and demand, but there is a large probability in your favor that it will. And also, if we use the Fibonacci, here we have a swing low and then we have a swing high. So we would take our swing high and we would take it down here to the swing low. And then as you can see on its retracement down, price came right into a level of demand, and it also perfectly touched the 0.786 retracement level before having another rally out. And then it came back down, it touched the 88.6 2 times, and then it finally picked its direction, and we haven't seen this price level since this fractal actually played out in the market. So stay with me, guys. I know this is a lot to digest, but it's super important that you at least have the basics of fractal trading down and supply and demand trading down, because it's brick by brick. Rome was not built in a day. You're not going to become a profitable trader overnight. You can buy signals all you want. You can join these groups all you want. But unless you have that conviction in your head that this is the trade setup that you want to take, well, then you won't be successful over the long term. This is a long-term game. Anybody can have one winning trade in one day. But the true profitable, successful traders, they're successful over the long term. And they do that by refining and sharpening their own trading skills. And that will only happen by you doing your own charting and by you taking your own trades. Sure, bounce ideas off of other traders. I do that as well. But it needs to come from you and your head. That is just one super, super important tip that I want to put in here, because I see so many new traders just relying on other people's calls, and you will never get to where you want to go. Yes, you can learn that way, but it's a crutch. You need to get rid of those those training wheels, and you need to do it on your own to really have the success that you want to have in the market. So I'm going to give another example of a nice supply and demand zone. Let's drop down to a 1 hour price chart. So right now I'm looking at this low, and where did it drop to? It dropped to a level of demand on the chart. We had a nice drop base rally. I'll just mark this for you guys. Price came perfectly down into the demand zone, and I know this is a supply and demand video, but what do you see here? What do you see here in this box? I see a head and shoulders pattern, a classic reversal signal. You have one shoulder, you got the head, and then you got the other shoulder, and obviously the neckline would be up here, and then price came and bursted right through the neckline. A lot of breakout traders took that trade, and then after this strong rally in price, we had a period of consolidation. That is the fractal. We had one swing high, swing low, actually one swing high, one swing low, another swing high, swing low, and then another high, another low, and then finally price picked its direction and left that consolidation by dropping again into another demand zone, which is the one down here. So this demand zone became invalidated after we had this strong move up. Price had a drop base drop, came back, tested it, and dropped right back here into this demand zone. So price really just goes from supply zone to demand zone. That is how the market moves. So again, pick up on these zones. So I'm dropped down to a lower time frame so we can see that this fractal will always play out. It doesn't matter what time frame you are on, the same pattern will always happen. So what is this here? This just looks like an 88.6 in a demand zone. If we take the low to the high, strong move down. Again, those 88.6, the reversal signal, the strong move down is my go-to indicator for that. Had a rally out, and then it came and it tested the 88.6. As you can see, we just nicked it with a wick, and that is your tight entry into a trade for maximum risk reward. If you were actually trading this, how you would do it is you would put your entry right here at the 88.6. You would put your stop loss just below this lowest wick, and then you would take a 3-to-1. So how that would look like is, so here you can see you're risking 438, and then you would want your profit to be at least 3 times that amount, which would be around 1,300. So you chart out your trade here, and then you would go and enter it on whichever exchange platform you were using, and you would have gotten this 3-to-1 perfectly. Congratulations to everybody who took this trade when it did play out. This was back in March 25th. So again, the fractal is one low, it creates a swing high, another swing low, it creates another swing high. We like 2 to 3 swing highs, and then it came down, came back up, and then finally broke, picked its direction. And as you can see in this same one, price rallies, creates a high, it creates the supply zone. It drops back down into a demand zone, and then it retests the supply zone. So this is the shorting opportunity. When price comes back into the supply zone, you short it. And then when price drops into a demand zone, we're going to have to look on the chart over here. Where is that line? It's right in a rally-based rally. Right here. So price drops into the demand zone. And this is your longing opportunity. So you always want to long the drops and short the rallies. This is how supply and demand works. We buy into large red sell candles. For example, this one right here. We buy into large sell candles, and we sell into large green candles. For example, you see this drop, base drop, price came, touched that, and then we would sell into these green candles. Most people have a hard time stomaching the fact that they're selling into large green candles and buying into large red candles. Psychologically speaking, it doesn't make sense when you see a bunch of red to be pressing that buy button. But the thing is, we're not going off of our lizard primal brain. We're profitable traders in the market, and to do that, we need to think like profitable traders do, not like the retail investors. Are you scared to buy into a red candle? Well, then you need to work on that. That is a block you have as a trader that needs to be worked on for you to get to the next level. So I'll give another example of a fractal on the 15-minute time frame. With this drop base rally, price created a level of demand, rallied away from the zone, created a swing high for the range, came and retested the demand zone. Now, how can we be confident that this is a strong demand zone? Well, we can take our Fibonacci and we can take the swing high, we can take that to the swing low, and we can see that price literally nicked the 0.78 extension to the T before picking its direction and having a strong rally in price. So it's the same thing. You'll see this on the daily, you'll see this on the weekly. The fractals are always there. The supply and demand zones are always there. It doesn't matter what time frame you're looking. It's just how the market works. All right, so to summarize everything up, you always want to be taking strong supply and demand zones. You do that by, generally speaking, picking the reversal zones, the drop-based rallies and the rally-based drops, because there we know that a large number of orders didn't get filled, price leaves the area, and then we'll usually retrace back into that area. We use our fib to confirm the entry, and we enter into the trade in the demand zone or in the supply zone. If you want to find out more about this, ask me questions. You can do that in the free Telegram group. So make sure you go ahead and join that right now. Again, like I said, we're going to be posting trade setups in there every single day. Another thing I want to mention is do not overtrade. Don't be rushing into trades. I say this because losing money is frustrating, and when you constantly overtrade and rush into trades, you can really burn yourself out, make rash decisions, and when you're frustrated, you tend to make even worse decisions. So always wait for high probability setups on the chart. Super important. And another thing I want to mention is do not take profits too early either. If you take profits too early, meaning you open a successful trade, but you get all nervous and stuff, and you're like, oh, what's it going to do if it goes against me? And you hit market sell or market buy if you're short, and you exit your position, and then you see price go in the direction that you actually already predetermined. That is not how you'll become a profitable trader. You need to let your winners always pay for your losers, and you do that by letting your winners play out. So don't be entering trades and then exiting them by getting all nervous and stuff. No, if you're brand new, start out very low leverage, even start out spot, learn pattern recognition, learn supply and demand, learn how to use your fibs, or learn whatever strategy that you want to trade with. Like I said, I'm a supply and demand fib trader. That's my bread and butter. That's how I make my money. The market is ever providing. It will always be here. So I constantly go in, see the same patterns play out over and over and over again. I make my money that way, and it's that simple. So don't overtrade, take 3-to-1 risk reward trades, and manage your emotions, manage your risk, and you're golden. It's really that simple if you want to become a profitable trader. Again, I'm really just touching the tip of the iceberg when it comes to this, but I just want to get this out to you guys so that you can apply it to your own trading and have many more successful trades. I hope you found this video helpful. If you did, let me know down in the comments below. But my name is Connor from Crypto Empire, and we'll see you in the next one.